Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Asiainfo Technologies Limited annual report. Asiainfo Technologies Limited offers a wide range of businesses and services that cater to various needs of telecom companies in China. At the core of its offerings are software products that include eyewear, data intelligence, billing, big data, customer relationship management, and others. These products enable efficient management of customer relationships, network operations, and data analysis. In addition to software products, Asiainfo Technologies Limited provides deployment services such as demand analysis, project design, software development, system installation, and trial operation. The company also offers operation and maintenance services to ensure the smooth functioning of its solutions. Furthermore, it provides data-driven operation, business consulting, system integration, and corporate training services. The company's portfolio also includes network security, related software products and services, as well as procurement and sales of third-party hardware and software. With a strong presence in China since 1993, Asiainfo Technologies Limited has established itself as a leading provider of telecom software solutions and related services. Asiainfo Technologies Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Asiainfo Technologies Limited trades at a higher price-to-earnings ratio of 43 times and a lower price-to-book ratio of 0.74 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a review of key business segments and market trends. Revenue growth is primarily driven by the smart digital operation business, which has experienced robust double-digit growth. Additionally, the satellite internet industry is expected to grow due to China's increasing deployment of low-orbit satellites. The company's ability to offer software products and services required by telecommunications operators also contributes to revenue growth. Furthermore, the development and maintenance of long-standing business relationships with telecommunications operators in China have been a significant factor. On the other hand, revenue decline is primarily driven by the telecom core system business, which has experienced an 8.9% year-on-year decrease. Overall cost reductions by operator customers have also contributed to the decline in revenue. The company's inability to provide specific information on the reasons for the decrease in revenue from top 5 customers further highlights the challenges faced. Overall, the company's revenue growth and decline are closely tied to its performance in key business segments and market trends. By understanding these drivers, stakeholders can better assess the company's prospects for future growth or decline. The net income of a company underwent significant fluctuations over the period under review. Initially, it decreased by 80% from RMB 516 million to RMB 104 million, indicating a substantial decline in profitability. However, when considering a different time frame, the decrease was less pronounced at 13.6%. The third instance showed an even more drastic drop of 79.8%, further emphasizing the volatility in net income. The profit margins also experienced a downward trend. A decrease of 3.3 percentage points from 37.4% to 34.1% was observed, indicating a reduction in profitability. In another instance, the decline was more pronounced at 6.1 percentage points from 7.8% to 1.7%. Furthermore, the average annual gross profit margin during the forecast period decreased from 37.9% to 34.9%. The reasons behind these changes were multifaceted. Reduced investment in the telecommunications industry and strategic workforce optimization through one-off severance compensation contributed to the decline in net income and profit margins. Additionally, reduced investment measures by operator customers further exacerbated the situation. Changes in business scale also played a role in the decrease in profitability. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the net cash generated from operating activities has been consistently reported as a significant amount. On page 11, it is stated that the company generated plus 407,402 million RMB from operating activities in 2025. This is further confirmed on pages 24 and 28, where the same figure of RMB 407 million is mentioned. Additionally, on page 97, the net cash generated from operating activities is also reported as RMB 407,402. These figures collectively demonstrate that the company is indeed generating positive operating cash flow, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, contract liabilities and trade and notes payables decreased by 4.1% and 25.2%, respectively, while borrowings remained unchanged. However, finance costs and interest expenses also saw a decrease of 7% and RMB 2185, respectively. Despite these decreases, there were instances where debt levels increased. For instance, total liabilities arising from financing activities rose by RMB 5331, and restricted bank deposits increased, while term deposits decreased to nil. Furthermore, the company's debt level decreased significantly from RMB 1,126,022 to RMB 848,683. In terms of interest expenses, there were mixed results. While interest expenses decreased by RMB 2185 in one instance, they also increased by RMB 8065 in another. Additionally, lease liabilities had a weighted average effective interest rate of 5.6%, and deferred tax liabilities decreased by 21.6%. Overall, the company's debt level and interest expenses have been subject to fluctuations, with both decreases and increases observed throughout the year. Management is outlining a comprehensive strategy to propel the company forward in the coming decade. The core strategy, dubbed AI First, aims to interconnect the intelligent world and secure digital connectivity while empowering a thriving digital intelligence ecosystem. To achieve this vision, the company will focus on improving efficiency through AI tools, refined management practices, and an optimized workforce structure. The company has accelerated its expansion into emerging AI businesses and is embracing technological and industrial transformation, particularly in AI initiatives such as Digital China, AI+, and 6G technology. Three major business segments have been established: Telecom Core System, Smart Digital Operation, and Smart Connectivity Product Business. These segments will drive future growth through incremental investments in computing power services, expansion into international markets, and collaboration with foundational model providers. Management is also highlighting the importance of cultivating relationships with next-generation operator clients, token consumption, and high-margin business models to fuel future growth. Additionally, the company plans to collaborate with ABB to deliver physical AI solutions for the industrial sector, further solidifying its position in the market. Overall, management strategy emphasizes the need for innovation, efficiency, and strategic partnerships to drive long-term success. The company's financial records reveal a clear indication of its dividend payment history. On page 159, it is explicitly stated that dividends paid. Yes, with an amount of RMB 874,723 recorded as dividends paid. Furthermore, on page 41, the proposed final dividend per share is listed at $0.54. This confirms that the company has indeed paid out dividends to its shareholders. However, regarding share buybacks, the information provided is inconsistent and not explicitly stated. While there are mentions of purchasing shares for a share award scheme on page 96, it does not clearly indicate a share buyback. As such, we can only confirm with certainty that the company has paid dividends, but not whether it has engaged in any share buyback activities. Concerns have been raised regarding inventory buildup and potential disruptions to the supply chain. The accumulation of excess stock can lead to wasted resources, reduced storage capacity, and increased costs for businesses. Furthermore, a surplus of inventory can also result in decreased demand due to oversaturation of the market, exacerbating the issue. The impact on the supply chain is equally concerning, as inventory buildup can cause delays and inefficiencies in production and distribution processes. This can lead to missed deadlines, reduced customer satisfaction, and ultimately, financial losses for companies involved. That concludes the financial summary for Asiainfo Technologies Limited. Feel free to comment below, and I will be happy to answer them when possible.